I want you to imagine something for a second. Think about the one asset class that everyone always says is just completely invincible.
Right, the true bulletproof investment.
Exactly, yeah. The kind of financial fortress that people build their entire portfolios around. And if you track the Asian markets at all, you already know the premier example of this.
Ultra-premium real estate in Seoul.
Specifically, the wealthiest neighborhoods, right, like the Gangnam area.
Because for decades, the foundational assumption there has been that a luxury apartment in Gangnam is a unidirectional asset.
It only goes up.
Right. It only goes up. It weathers any macroeconomic storm.
But the mission for our deep dive today is to explore a sudden and massive shift in this exact market.
A really unusual pivot.
Yeah, because for the first time in 2 years, prices in these elite, ultra-insulated areas are actively falling.
Which is fascinating.
It is. And today we want you to understand exactly why the wealthiest homeowners in the country are suddenly rushing to sell their prized assets. At a discount, too.
And what this reveals to you about the psychology of money and taxes.
Right. And to do this, we are pulling from a collection of recent, hard-hitting financial and real estate reports from Mail Business News Korea.
Which are incredible sources. And, you know, if you are imagining this conversation visually, I actually have my backdrop set to this glowing, shifting panorama of the Seoul cityscape right now.
Setting the mood.
Exactly. Because the data points we are looking at from these sources, they aren't just about housing. This is a real-time behavioral economics experiment.
It really is. Now, before we get into the actual numbers, we need to set a quick boundary for you, the listener.
A very important one.
Yeah. The sources we are analyzing today mention proposed government tax policies and specific political figures.
Notably, President Lee Jae-myung.
Right. And we want to be unequivocally clear here that we are neutrally reporting the contents of these sources just to understand the market reactions.
We are taking absolutely no political side.
None at all. We are strictly looking at the economic cause and effect here.
Just identifying the policy variables and watching how the capital moves.
Okay, let's unpack this. We need to lay out the core data first.
The Korea Real Estate Board numbers.
Right. So broadly speaking, Seoul's overall apartment price increase rate has slowed down.
It went from 0.1% to 0.09%.
Which, you know, a marginal slowdown isn't completely unheard of. But the real shocker is localized in what's called the Gangnam 3gu.
Right. So that's Gangnam, Seocho, and Songpa districts.
And Yongsan as well. In these specific elite areas, they haven't just slowed down. They have been falling for 2 consecutive weeks.
Which is a huge structural shift. These districts are the pricing engine for the whole city.
Exactly. And the specific examples from the sources are just mind-blowing. Like, let's look at the Yunma apartment complex in Daejeon.
A legendary complex.
Right. In February, a unit there sold for 3.64 billion won.
Which sounds like a lot until you realize
that is a drop of over 100 million won since November.
100 million won just wiped out.
Yeah. Or the Jamsil-Wells apartment complex. We saw a unit there drop 200 million won from its January peak.
200 million won in just a matter of weeks.
What's fascinating here is trying to understand the trigger.
Right, because it's not a sudden demographic shift or a standard market correction.
No, it is a ticking clock.
Exactly. The government instituted a grace period for heavy capital gains taxes on multiple homeowners.
But only if they sell within a specific window.
And that window closes on May 9th.
May 9th. So the whole market is being dictated by this countdown.
Right. And inventory has just surged. It's up 30% in 2 months, crossing 70,000 units.
Because sellers are doing the math.
They are looking at their portfolios and realizing something stark.
That taking a 100 or 200 million won loss on the sale price is actually mathematically better than getting hit with the impending tax bomb.
Because without that grace period, the capital gains tax for these multi-homeowners can be incredibly punitive.
Right. So an intentional discount is basically the cheaper option.
It is a defensive preservation of capital.
Which brings up a great point from the Hana Bank real estate expert in our sources.
Their prediction for April.
Yeah, they predict that April will be the absolute peak for these panic sales.
Because it's the final 30 days before the deadline.
It's like a massive high-stakes game of musical chairs.
That is a perfect analogy.
The music stops on May 9th, and absolutely no one wants to be left holding the extra house when that happens.
So they are actively undercutting each other to find a chair.
Right. But the capital gains tax to sell the house is really only the first pressure point here.
It's only half the story.
Exactly. We have to transition to the second major issue, which is the tax to simply own the house.
The holding tax.
Right, the holding tax. Our sources detail that President Lee Jae-myung announced plans to regulate ultra-high-priced homes.
To bring them up to an advanced country level is the phrasing used.
Right. So let's break down those numbers for the listener because this is crucial.
Currently, South Korea's effective property holding tax rate is around 0.1%.
Which is relatively low.
Very favorable for holding assets. But in the U.S., Japan, and Europe, it sits around 1% of the market value.
So we are talking about bringing it from 0.1% to 1%.
It's a 10 times increase.
I want you to really think about that for a second. Imagine your annual property tax bill suddenly multiplying by 10.
Even if you are incredibly wealthy, that changes everything.
It transforms a prized asset into a massive financial liability overnight.
Exactly. And buyers have long memories. They remember the previous Moon Jae administration.
Right, where holding taxes made a lot of wealthy asset owners stumble.
They ended up asset rich, but cash poor. And because current market prices are even higher now than they were back then,
The potential tax burden is just a terrifying unknown.
it's an unquantifiable risk. And markets hate uncertainty.
So buyers are completely freezing up. They don't want to buy a $3 billion apartment if they can't accurately model the annual carrying cost.
They are staying entirely on the sidelines.
But here's where it gets really interesting. Because it's not just regular buying and selling that's frozen.
The intra-family transfers are stopping too.
Right, the generational wealth transfer. Usually in Gangnam, wealth is passed down. Parents gift these premium apartments to their children.
The golden spoons?
Yeah, the golden spoons. But the gifting is abruptly stopping.
The data on this is really striking.
It is. In the Gangnam 3-go and Yongsan, the number of people applying to gift properties fell 20% in January and February.
A 20% drop compared to the end of last year.
Which is a huge anomaly. Why is that happening?
Well, the insight from the Shinhan Premier Pathfinder expert explains it perfectly. If a parent gifts the apartment today,
The child inherits the property.
but they also inherit that terrifying, unpredictable holding tax we just talked about.
So the gift becomes a burden.
Exactly. It's ironic, really. A multi-million-dollar Gangnam apartment has essentially become a white elephant.
That is wild.
Yeah.
Parents feel guilty giving a luxury asset to their kids because the annual taxes might legally bankrupt them.
It's cold, hard logic.
Yeah.
The parents look at the numbers and realize they would rather sell the property at a huge discount
Take the capital gains hit today,
and just hold on to the liquid cash.
rather than ruin their kids' finances with an unknown annual tax liability.
They are prioritizing cash over physical assets to protect the next generation.
So what does this all mean for the broader ecosystem? Because this doesn't just happen in a vacuum.
No, it cascades down. And to see that, we have to look at the canary in the coal mine for real estate.
The auction market.
Exactly, the auction market. If you think about my visual backdrop again, I'm making notes on a legal pad, and the scene has shifted to a tense auction house.
Because the auction market is traditionally a leading indicator.
Right. It strips away the retail emotion and shows you what cash-rich, sophisticated investors are willing to pay for future value.
And right now, that indicator is flashing red. The ice has formed so fast.
In January, the winning bid rate in Seoul was a red-hot 107.8%.
Meaning people were paying over the appraised value. They were pricing in future growth.
But by the fourth week of February, it plummeted to 97.2%.
That is the first time this year it fell below 100%.
The forward-looking premium just completely evaporated.
And the specific anecdotes from the sources really make this real. Like there was this massive Gongshin apartment in Samseondong.
Right, the one with the 1.53 billion won appraisal?
Yes. It hit the auction block and failed to sell. Not just once, but 3 times.
Nobody wanted it.
It finally cleared on the 4th try for just 933 million won,
That is just 61% of its appraised value.
which is a staggering loss of perceived value. And then there was that Seoul apartment.
A top-tier brand in a prime location.
And it actually sold at auction for less than its appraisal and less than its current market price.
If we connect this to the bigger picture, it exposes a massive vulnerability in the market.
Specifically for gap investments, right?
Exactly, because auctions are usually very popular for gap investments. Buying through an auction lets you avoid the actual residence duties required in certain permit zones.
But there is a mechanical lag in how auctions work.
Right. Auction appraisals are not real-time. They are based on prices from 6 months ago.
Oh, so the appraisals hitting the market today were set before this whole May 9th panic even started.
Yes, before the prices started dropping. So an investor looks at a 6-month-old appraisal of 1.5 billion One.
They'd look at the current street prices dropping by hundreds of millions of won.
And those old appraisals look terribly overpriced.
No one wants to catch a falling knife.
Exactly. Savvy investors refuse to bid on yesterday's inflated prices when the real-time market is contracting. They know if they do, their equity could be wiped out instantly.
So the smart money just stays on the sidelines entirely.
Until the May 9th deadline passes and the holding tax regulations are finalized, the capital's just going to sit there and wait.
Which is just an incredible journey we've been on today with this deep dive.
We really covered a lot of ground.
We've seen how a looming May 9th tax deadline and the fear of a 10 times holding tax increase are fundamentally rewiring the brains of Korea's wealthiest property owners.
It is turning prized family heirlooms into active liabilities.
Liabilities that they're absolutely desperate to sell. And I want to remind you, the listener, why this matters to you.
Even if you don't own property in Seoul.
Right. Because this deep dive is a masterclass in how policy shapes human behavior.
When you change the rules of the game, even the most entrenched players will instantly change their strategy.
They have to. The survival of their wealth depends on it.
This raises an important question, though, a final thought I want everyone to consider.
Let's hear it.
If the ultra-wealthy in Korea are successfully cashing out of premium real estate right now to avoid these holding taxes,
Which the data shows they are.
then they are going to be sitting on absolute mountains of liquid cash.
Right. The wealth doesn't just disappear.
Exactly. So where does all that money go next?
That is the trillion-one question.
Will it flood the domestic stock market? Will it move offshore to seek yield in safe havens?
Or will it create a completely new, unexpected asset bubble somewhere else entirely? It's a massive wave of capital looking for a new home. Tracking that velocity is going to be critical.
Absolutely.
So keep your eyes on the markets, keep questioning the obvious, and watch where that cash flows. Thank you so much for joining us today, and we will catch you on the next deep dive.